According to data from SWIFT, the Chinese currency share of global payments on the network actually rose to, I think it's a record high, 4.7%, give or take. That's as of March of this year. And as you can see over the past few years, that's risen incrementally. Now, the dollar does remain, though, king with more than 47% of transactions. But the Chinese currency became the fourth most used currency back in November, overtaking the yen for the first time since 2022. Now, the British pound share was around 6.5%, but as you can see, of course, just the trends, as you can see on your screens there.
Yeah, it's a result of years-long efforts by President Xi Jinping to make his country a, quote, financial power. And speaking to senior officials earlier this year, Xi said in his words, quote, "It is necessary to accelerate the construction of a modern financial system with Chinese characteristics. But the renminbi remains underrepresented given the size of the economy, and analysts are chalking that up to the lack of freedom and how it's used." Basically, that capital account is still closed. Among the issues is that it's still subject to capital controls by Beijing. It's not fully convertible like the greenback, the pound, or the euro. And Chinese markets also aren't yet deep enough. So there's a shortage of renminbi-denominated investment products. For more, I want to bring in Matteo Maggiori, professor of finance at Stanford Graduate School of Business, joining us from Boston late this evening. Also with us in the studio is our Bloomberg Intelligence Chief Asia FX and Rate Strategist, Stephen Chiu. Stephen, I'll start with you first. Where are we in this whole roadmap to internationalization with renminbi? Do you think that we are really gaining ground, or have we taken a step back?
Good and bad. I mean, we are gaining ground in some aspect. If we look at, for example, China's own data of cross-border payment and receipts, so last year the CNY has surpassed the dollar for China itself as the top cross-border payment currency. So on that regard, yes, we are gaining ground just because it's China's choice to actually pick their own currency. It's also thanks to Stock Connect with Hong Kong and all that. So it's all great. If you look at the SWIFT data, of course, it's the fourth most used payment currency. In the same report from SWIFT, actually as a trade finance currency, it's the third, just after dollar and euro. So all these are all great. But when we look at other aspects, for example, as reserve holding, it's actually losing ground. So the latest data as of the first quarter, the CNY now only had just over 2%, and it has become the seventh reserve currency. It used to be fifth, now it has down to seventh. So Canada, Australia surpassed it. If you look at the bond holding from foreign investors, it's only 3%. It's still low. So we can see a segregation over there.
Professor Maggiori, if you could chime in on the same question, where do you think we are on this longer-term project? And, I guess as Stephen was correctly pointing out, let's look at it through the prism of three, as a trade currency, as an investment currency, and as a reserve currency.
So, it's an interesting point in the road. China has made massive progress. They liberalized access to the bond market through the Bond Connect back in 2017. They've had inflows, and now they've been experiencing outflows. And the outflows are a mix of, weakness in China in terms of the economy, but also, higher interest rates in the rest of the world, and most of all, geopolitics. For U.S. investors particularly, it's a tense moment to invest onshore in China. So, when these periods come around, they test the resolve of the market to keep up the reforms, don't lock the gates on foreign investors, and hopefully as the geopolitics works itself out, the inflows will come back in. So, if you want to establish your reputation as a currency that has an international role, you have to withstand these market pressures and you have to keep up the reforms. Payments, we mentioned payments and trade, those are two very interesting aspects, particularly for China, because if they establish the currency more as a trading vehicle and for making payments, they create a payment system that might withstand influence from the US. They've seen what has happened to Russia, what has happened to other countries that have been pressured through financial sanctions. China is of a whole different size, but it's very reliant on the international dollar-based payment system, and they would like to isolate themselves more. It's a long way to go, but there has been a lot of progress.
Yeah, it's a good point. The change in global trade, this whole de-risking out of China ties there that could maybe raise the profile of renminbi. I'm just wondering, Matteo, as well, obviously we talk about the hurdles that we still need to clear, whether it's, a closed capital account, whether it's the fact that it's not fully convertible. Do you think those are deal breakers in any way?
I think those are part of the process. The deal breaker would be if China were to impose any restrictions on investors right now that want to take their money out, that would very seriously damage the reputation. in some sense, when the investors came in, they knew what the restrictions were. As long as those are kept constant or relaxed, there isn't much of a reputational loss. Where you get massive reputational loss is when you change the rules ex post. Clearly, most foreign investors are worried in bringing money onshore in China about, on a day when there is a crisis, can you get it out quickly? So that's probably the most important part. They have to keep up the reforms in terms of further and further access and more market forces. But ultimately, if you want to establish yourself as an international currency, you have to be convertible. You have to be very stable, particularly during crises. And that's a long way to go. The way I think about China and its currencies in levels is way far off the dominance of the dollar, but it has a lot of the characteristics that make it an interesting play, and it could evolve very fast. So in growth, it's changing quite quickly.
Yeah, Stephen, I noticed you itching to say something.
Thank you, David. Yeah, I actually have a very interesting thought. So market reform, of course, it's very important, but it's not the deal breaker for China. Because if you look at Japan, if you look at the sterling, now they're only having 4 to 5% of reserve currency share, even though they are a very developed market, open up free-flowing currency. So it's not a deal breaker. The thing is that the other reserve currency are so similar to the dollar, so China doesn't want to be another US. It has to go down another route. So to my view, actually, if geopolitical tension across the world exacerbate, that will help China. Just look at Russia. Over the last few years, they have been using the CNY just because of that, not because of China opening up. So if we are seeing more of these conflicts involving US and China, and then especially China is the major trade partners of ASEAN, obviously top partner, a lot of the EM countries, if those countries or economies forced to trade or settle in the CNY, then there's a surge in demand for the CNY as a reserve currency. So that's why I think this is actually a more important and actually more likely development for China going forward.
Given this, you've heard it from Chinese authorities, MOF, PBOC, this desire for greater internationalization. Can we assume then that dollar China can remain stable for the next 6 to 9 months?
To be honest, it doesn't really tie to exchange rate, because quite interesting is last year, obviously, dollar was so strong, the CNY has weakened. Yeah. But in terms of globalization, if you look at the metrics that we have just talked about, it has risen, it has improved. So that tells you that we don't need an appreciation to back a globalization. But of course, sometimes it goes hand to hand. But for now, stability is most important. We are heading toward the third plenum, especially I think the PBOC wants the Fed to cut. If that happens against a weak dollar backdrop, that will help the currency. So for now, stability is key, but it doesn't mean that it's essential for globalization.
Professor, to bring you in on that point, your advice to policymakers, if they want to further the use of their currency, what would be the things that they need to keep in mind and just push forward as priorities these next few years?
I think number one is safety. So a reserve currency is an asset that you hold because in a crisis it holds up its value and you can liquidate it. So safety and liquidity are paramount. Now the geopolitical tensions will help because on the margin, a few of the countries that are farther from alignment with the US are thinking, well, I might want to rebalance a little bit, but probably those gains are relatively limited overall. So it's very difficult for a government to make promises such as those that the U.S. Treasury makes. You can park a lot of money in the treasuries. There is almost no risk of default. You can take it out when you want. Now, they have imposed sanctions, but those are extremely limited and narrow in scope on a few countries. So I think for China, it's very important to keep up sort of the reforms, make the market safe, make it liquid, and withstand the capital outflows that will happen. Every country that has gone through this process has had to withstand major crises where the foreigners get scared, pull the money out fast. It creates domestic problems. But in some sense, you have to let them do it. That's part of the function of a market like this.
And it doesn't seem like anything that can really do anything to change the dollar's outlook in some ways, right? Do you see anything in the next few years, Matteo, that could actually displace the dollar as the world's top reserve currency?
Probably not in the next few years, but over the long run, things do change. These type of changes happen extremely rarely through history, but when they happen, they can happen relatively fast. I think for the U.S., the major question is more domestic. It's domestic politics, the fiscal situation. I think China is a far distant competitor in terms of finance. I think for the U.S., we're going to see major hiccups are probably going to be largely self-inflicted from the domestic situation. The one exception I would mention is the U.S. has been trying on the payment side to really limit alternatives, because they use the payment system and the settlement system very heavily for sanctions. And that's where I suspect we're going to see more of the geopolitics play, particularly coming from China and from trade. I think China will settle much more of its foreign transactions using its own systems in the next few years.